A nice jump in housing activity this week with the country finally thawing out. New listings and inventory were up pretty big for the week. The weekly new pending sales came in 4% more than a year ago, so that rebound is encouraging too. It's totally common for weather events to make the early part of the year difficult to measure. We just warmed up and just in time for another big storm to pummel the East Coast this week. The spring housing market really takes off in the second week of March. So once the weather calms down a bit. So in a couple more weeks, we'll start to get an even clearer picture of how consumers are reacting to the lowest mortgage rates in years. Will we see rates dip into the fives this week? Will it matter? As of mid-February, the answer is a tentative yes. Lower rates are having an impact. Remember that we're expecting only 5% gains in sales and no home price gains for the full year 2026. And we can see the 6% rates impact in a few key metrics. The weekly pending sales data on the non-storm weeks have been up over 2025. Overall, inventory is growing much slower than last year. We can also see the price reductions dip. Fewer price reductions is an indication of improved demand. All right, let's dive into the data and see how it's playing out so far this year. There are now over 700,000 single-family homes on the market. That was a healthy gain of 1.4% for the week. That jump feels like a rebound and thaw out after a few weeks where inventory fell. A little up and a little down week to week during February is totally common. There are always things like weather events that can stall big chunks of the country. That said, a 1.4% jump in inventory in the middle of February is a big jump. It's worth paying attention to. Is it just a rebound after 2 weeks of holdback, or is there something bigger at play here? The thing to watch is whether inventory starts growing rapidly from here. The supply of homes on the market has not been rising rapidly for months. As soon as rates turned the corner last summer, so did inventory. The question remains, are there more sellers that have been waiting to sell than buyers waiting to buy? That would create an environment of rapidly rising inventory, and that's what we're watching for. So in this chart, each line is a year. The blue line for 2026 shows about 9% more homes on the market now than a year ago. The orange line is 2019. That was the last year before the pandemic boom. There are 15% fewer single-family homes now for sale now than in 2019. We're almost back to normal, still low. Of course, this is a national view, but inventory is not evenly distributed. Texas has 40% more homes on the market now than in 2019, but Illinois has 70% fewer. Connecticut has 75% fewer homes available. 12%, Florida has 12% more. California has 20% fewer homes for sale than in 2019. So all in all, 18 states have more inventory now than at the end of the last decade, 2019. 32 states have fewer homes available now. In most of the country, more inventory is still desperately needed. So let's see if we get it this spring. This week saw just over 60,000 single-family homes newly listed for sale. That was a jump of 11% for the week and 12% more than the same week in 2025. So healthy new listings volume in the warm weather rebound. We already have another storm in the east, so that'll slow again there. But February is February, right? So I have 3 lines in this chart. At the blue line at the left end is 2026. The seller volume started a little better than the last 2 years. It dipped for the deep freeze and then recovered this week. So I interpret this as a good sign. We want to see the new listings line grow faster than the purple line in 2025. In general, more sellers means more sales can happen. The challenge here is that the markets with already the most inventory are also the ones where the most new listings are happening. As of now, there aren't enough new listings to each week to help inventory grow, except in places like Texas and Oklahoma. The other factor influencing inventory this spring is the relist rate. So these are the homes that were for sale last fall, withdrawn from the market, and are now relisted. This week, the percentage of the market that is relisted from last fall is 11.1%. That's 78,000 single-family homes. So in this chart, each bar is a week. The taller the bar, the more homes that have been relisted after being withdrawn. So this year is notably higher than last year. The relists climbed this week with the weather warm-up. So this jives with the other data sets. There are more sellers leaning into slightly improved affordability. So we'll see if these relists, if these sellers get the offers that they didn't materialize last fall. The weekly pending sales came in 4.6% ahead of the same week a year ago. That to me looks like the start of a rebound after the snow and cold across the country. So we counted 59,000 single-family homes, new contracts pending, and another 12,000 condos. But those 2 negative weeks from the storms means we're averaging no growth in home sales over 2025 for the last month. So January's pace was above last year's pace. Then we had a few weeks below last year when the storms hit. And the average is 58,000 single-family homes each week over the last month. And that is essentially no growth over last year. That's what we're showing in this chart. It's still winter in most of the country. The spring season doesn't really pick up until March, and I continue to expect that consumers will respond to the lowest mortgage rates in 3 years, and that we'll see that response in the weekly pending sales data. So we saw it in this week's small rebound of 4.6% gains over 2025. So the blue line here is above the purple line in January, the left end of the chart. That shows that early season demand at a better pace in 26 than 25. The sales pace lost momentum when the storms hit a few weeks ago. So after that dip, the current 4-week rolling average here, sales rate shows no growth over 2025. Year to date, though, we're counting 2.2% more single-family transactions now than in 2025. Overall, just tiny gains. So the takeaway from home sales is I have 3 ways to measure home sales. The weekly pending contracts this week came in 4.6% above last year. The recent 4-week rolling average, which includes the storm, shows a sales rate for the month as unchanged from last year. No growth. Year to date, which includes January before the storms, and now a week after, shows 2.2% more home sales, single family, than last year. Based on all that, I continue to expect that the market will expand to about 5% gains over 2025. Some weeks will be above last year. Some weeks will be below. And we're looking for average gains over the year. And I think we're on track for that growth. There is no data yet that shows better growth than that, and no data that shows sales rates falling off dramatically. So stay tuned for that. Even as sales really struggled to grow over last year, home prices are staying roughly unchanged. The median price of this week's pending home sales came in just over $395,000. That's 2% above last year at this time. The chart here has the median home price for these newly pending sales each week. This year's blue line is coming in slightly above last year. I've also shared other measures of pricing that I like. For example, price per square foot. And that number, the asking price per square foot in single-family homes, is coming in 1.5% below last year. So some measures are above last year. Other price measures are below. No matter how you slice it, though, home prices are basically unchanged across the country for another year. Prices are the weakest in those markets that have a lot of inventory, which makes sense. But even in the tight inventory markets, home prices are higher than a year ago, but that rate of appreciation is slowing. So we're still expecting just 0.5% increase nationally this year. In the moment, my gut says the data is leading that higher rather than lower, but it's basically on target so far, expecting 0.5% home price gains for 2026. Let's close today with a check on the percent of homes on the market with price reductions. As of now, 31.9% of the market has taken a price cut from the original list price. That's down 30 basis points for the week. Last year at this time, price cuts were already accelerating. Demand was slow and slowing further last year with mortgage rates in the sevens. I think this data shows us very clearly a different demand trend this spring from last year. This is an improving demand profile. The blue line is ticking lower when last year the purple line was moving higher. When sellers don't get an offer, they may choose to reduce the asking price. Last year, more people had to reduce their asking price. Notice the slope of this year's line is not as steep as the yellow line from 2023. 2023 was showing surprising strength after the fall of 22. So there are little improvements now, and you can see how the demand looks better than 25 or 24 in this chart. And I think that's a relatively good sign. With this data, you can see in real time how people are reacting to the latest changes in affordability and economic outlook. So it's not great, but it is improving. I'll call that a win. What I'm watching for now is whether these lower rates continue to improve demand. So the blue line eases below, say, 2024. In the spring of 24, rates were climbing and price reductions were heading up too. So far, the signal here tells us that there's not any big price drops in the data. There's enough demand to support current prices. The most bearish of the forecasts are not happening currently. All in all, I had hoped for a little rebound in the data after we thawed out a little bit across the country. And I think we got that this week. Price reductions are fewer, inventory jumped, new listings jumped, new pendings jumped too. We roll into another week now. Stay tuned. Another storm hitting the Northeast. We'll see what happens next. More next week, everybody.